Hi, this is Mike Norman and welcome to the Mike Norman Economics video series. Well, many of you have been asking me whether or not I think the stock market is going to continue to rise. And in order to answer that question, in order for me to answer that question, I have to determine whether or not we have a scenario of continued economic growth. Because without that principal fundamental growth, you cannot have a sustained rise in the stock market. Now, in order to determine that, I look at the four components that go into making up our economy. And anyone who has viewed my first video, Pitbull Economics Lesson 1, What is the Economy? And you could find it on this channel, the Mike Norman channel. I break down the four ingredients that comprise the recipe for the U.S. economy. The first ingredient, the largest ingredient, is personal consumption. That's everything that everybody spends money on, individuals that is. That's about 71% of our GDP. The second ingredient is the government, which right now is about 21% of GDP. That's everything the government spends money and invests in. The third ingredient is business spending and investment, everything that businesses spend money on. That's about 10%. So let's add it up right now. We have 71% is personal consumption, 21% is government, that'll bring us to about 92%, 10% is business spending and investment, that brings us to 102%. Well, how did we get over 100%? Well, we have one more ingredient called net exports, which are exports minus imports. That's a negative number. That takes away about 2% from GDP because we import more than we export, although that number has been shrinking. So there you have 100%. Now, when we go down the list, in order to answer that question, where will the growth come from if we're trying to determine whether or not we'll have a rising stock market, if we look at the biggest ingredient, personal consumption, that has really been flat to down over the last 2 years. Personal consumption around 71%, that's where it's been. And my feeling is, my sense is, it's going to stay at best flat because we're really not doing anything from a policy standpoint to boost incomes so that people have more money to spend. And let's face it, a lot of people have lost their jobs. The second biggest component, government spending and investment, that's where a lot of the growth, the driving force, has been coming from in the last year to 2 years. Business investment, way down. And net exports have actually been improving. So the amount that it is subtracting from GDP is getting smaller. So the combination of government spending and investment and net exports should be the driving force going forward. Now let me just talk a little bit about this government spending because I know a lot of people are just fundamentally opposed to it. Last night I was watching television, I was watching CNN. Don't ordinarily watch that channel, but for some reason I was. And they were talking about the economy, and as the discussion went on, they kept flashing up on the screen, when will the government stop spending? And I just find this very, very odd. There's such a tremendous misunderstanding about the role of government in the economy. Suppose you were in business. You had a wonderful business. You were an entrepreneur, but 20% of your sales came from one customer, more than 20%, 21, 22% of your sales came from one customer. That's a big customer. You may not like that customer, you may not like doing business with that customer, but if you're a shrewd businessman, business person, you probably want to see that customer continue to do business, especially if other customers were cutting back. That's really the way to think about it. The government is 21% of the overall economy. And although philosophically many of us might not like that and might prefer to see the private sector entirely support our economic output and employment, the fact of the matter is It's just not happening now, and it hasn't really happened any time in the last 50, 60 years, 70 years. So pretending that it's not there is silly. And what's worse is to say that somehow the government spending is taking away. That would be like saying your biggest customer in your business, I wish he would just go away because that would make my business so much stronger. Just not going to happen. So getting back to the original question, do I think the stock market is going to continue to rise? My answer is yes. Will it be a powerful, sharp, upward spike? I don't think so, because the new driving forces of the economy, which will continue to be, in my opinion, government spending and an improvement in that net export number, those are still too small relative to what we have come to rely on, personal consumption. And I don't think personal consumption is going to grow very much. It should stay static. It might increase a point, 0.5%. The main growth push will come from continued government spending and net exports. But this is good news if you're bullish on stocks, because most analysts out there, at least the ones that I've heard, really don't understand this. And as the market will continue to rise, supported by this underlying growth trend, and it might be tepid compared to prior years, a lot of these analysts are going to be sitting there scratching their heads, because they're going to be looking at personal consumption, which is not going to be going anywhere. So bottom line is, I think, my opinion, use the pullbacks in the market to buy good quality stocks, especially stocks, big multinational companies that are going to benefit, I hate to say this, but it's true, from the export trend, which will continue to evolve. You know, one of the things here, I'm going to finish up on this note, the reason we have decided to transform our economy in this fashion, and it's exactly what's happening, a transformation, is because our leaders, and for that matter, most of the American public, believe we face these enormous imbalances, and it is our role, it is a necessity that we change the American economy to address these imbalances. I think they're wrong. I think we had it just fine, but I'm not the one making policy. That's it for now. I'm looking forward to your comments. As always, this is Mike Norman signing off for this video. Take care.